Joining me on the line to discuss the main economic events this week is Jan Randolph, Director of Sovereign Risk at the IHS. So Jan, we have a number of monetary policy announcements this week. Let's start with the RBA. What are you expecting from them?
Well, the RBA has already brought interest rates down to 2%, a record low for Australia. But the economy and markets and the currency are all under downward pressure, basically because of the weakness in China, the weakness in commodities, and that's affected all commodity currencies. The Aussie dollar now at 73 cents to one US, where previously at its peak it was at over 1-to-1 parity. So the question is, does it cut or will it hold? I think probably this time it will hold, but we can expect probably some future cuts in the pipeline.
Moving on then to the Bank of England, what are you anticipating from Mr. Mark Carney?
Well, it's interesting. The UK economy has been doing surprisingly well on headline GDP numbers, but on the other hand, the PMIs were pretty disappointing and they've been falling this year. Having said that, the sterling is strong, consumer spending is still up, the economy is still ticking over at a fairly strong pace, and the question is really inflation. We have an inflation target. The Bank of England has to be assured, just like the US Fed, that inflation is on an upward trend, and that's the more normal basis upon which central banks will trigger or contemplate a rate rise. I think there is an interesting debate about whether the Bank of England will raise rates before the US. I think it's a little bit semantic. I think they will work more or less in tandem. I think the key thing is making sure that the recent weakness in oil prices and commodity prices will dampen the rise in inflation, but that will be a pass-through effect. That will wash out eventually. And I think the Bank of England will recognize that. And as long as the strength of the economy holds up, the PMIs start improving, then I think they will contemplate a very small gradual increase, probably towards the end of this year, early next year.
And then the BOJ. What should investors be listening out for here?
Well, the Bank of Japan has undertaken a very powerful quantitative easing program and successfully, if not deliberately, led to a weakening of the yen. And that has worked. The question is whether the Japan economy is going to be shifted by what's happening in the rest of Asia, particularly China. I think they've been very busy with monetary policy so far. I think they'll probably hold back and wait to see how global trends develop, particularly what's happening in China and the US, before the BOJ starts either to continue to ease or hold on.
We also have the highly anticipated non-farm payrolls on Friday. The US unemployment rate is currently at a 7-year low. What are you expecting from the release, and could this make or break a September rate hike?
Well, it's absolutely true. The labour market and the various characteristics of the labour market are absolutely central because what it says about the strength of the US economy. And the central bank, Federal Reserve, will not want to raise rates if it is not comfortable that the US economy can basically take the baton of growth back from the central banks after holding the baton under quantitative easing. So I think the key indicator in the labour market will be incomes, earnings growth. The earnings growth will be good for the economy. It will be a sign that the US Fed can start on a gradual increase. That is absolutely key. I think the other key indicator will be inflation again. It wants to see inflation on a firm upward underlying trend towards its target 2%. And the recent weakness in oil and commodity prices again may deflate that a little, but again that would probably wash out. There'll be a pass-through effect. It would be helpful for real incomes. So I think the key indicator is not just the unemployment rate and the number of jobs created, but the key thing will be incomes and whether there's any income increase. If there's an earnings increase, I think that will make the US much more comfortable to pursue an increase in interest rates.
In terms of currencies then, what is your outlook for the pound, the euro and the dollar this week?
I think the euro will continue its downward movement against both sterling and the US dollar, simply because the monetary policy stance is so different. The ECB is still firmly stuck on its quantitative easing program. It will not ease back on that or abort that in any time soon. That fundamentally will give strength to the dollar and to the sterling and weakness to the euro. Sterling has been flying high. I think the more likelihood that there will be some tightening in the US and UK well before the ECB will continue to mean weakness to the euro and relative strength to dollar and sterling.
Jan, thank you very much for sharing your insight. Well, that is all for now, but we will have more on these events as they happen throughout the week. Goodbye for now.